This is the kitchen for Airtel. We cook mostly fintech products. We are a subsidiary of Airtel Rwanda, subsidiary that handles the MFS business, the mobile financial services business. Ours is mostly to always be on the lookout on what our customers are looking at, getting in terms of services, products, innovations. But of course, doing this in a very heavily regulated environment and ensuring that, of course, we continue to give optimal value to our shareholders. So welcome to the home of Airtel Money. I joined Airtel at the beginning of 2022, so I'm closing almost 4 years now. It's been an interesting journey because at the time I joined, Airtel Money was still quite a basic service of cash in and cash out. So customers mostly knew us for free P2P. When you send money, they knew just you can send money free of charge using Airtel Money. But that was pretty much it. We did not have any other, what we call use cases. We did not have really much. So quickly, we had to work with our partners on the sales and distribution side to build a very robust agent network, distribution network. And I believe within 6 to 9 months, we tripled our base of distribution, from about slightly above 12,000 to almost 60-something thousand within a very short time. All because we tried to build on the synergies that the digital wallet was bringing to the SIM card. So the SIM card was not just something you used to make a call and browse, but more of like your banking solution on your pocket on the go. So when we built this synergy, what this meant was that our agent networks now had multiple outlets of revenue. So you have revenue every time you sell airtime, you have revenue every time you do a bundle, but you also have revenue every time someone comes to do a cash in, revenue every time they come to do a cash out. So you bundle all these different streams of revenue, then they would really make economic sense to the agent. And that is how really we managed to do it. And of course, we remained very competitive on the commission base that we are giving our partners. So it's been an interesting journey. And then of course, sometime mid-2022, we came up with other innovative solutions, including the one that probably will be delving more into on interoperability. eKash for me is just two things. One, to the service provider, eKash is just another springboard to reach out to a much more bigger ecosystem, to be able to offer services to a much bigger ecosystem of customers. To the customer, it's just another window to be able to interconnect and engage with customers on the other network that you are not on. So in simple terms, eKash simply just widens what we call the pie. So it opens up opportunities for the customer to be able to interact with multiple customers, both on net and off net. For us as service providers, it opens up opportunities for us to scale faster. What I mean is, if we have to build solutions, we definitely don't come up overnight and just build a solution. We scope the client base, we scope the need, we scope the risk, we scope the revenue, we scope the cost. So much that goes into it, then there's a lot of integration that happens. This being a fintech, we do a lot of integrations with different partners. So what eKash has brought is just one single window, one single integration, one single project, one single business model, but accessing an entire industry, opening up the base, opening up the the ecosystem for all of us, and hence the word widening the pie. When you look at it from the word go, eKash came in to empower the consumer to have more choices. Yeah. We used to have ecosystems whereby we lock customers into a closed loop ecosystem. So a customer on our network could only do what our network can provide and deal with individuals on our network. Whereas the other network also could do the same. But when eKash came in, what this did, we broke that mirror, that wall. So we broke the wall between ourselves, our customers, and customers on the other side of the business. And not only on the mobile money side, also on the banking sector, because what eKash brought was different players. You have banks, we have MNOs, we have other fintech players, we have aggregators, you have pretty much SACCOs, you have billers. So everybody comes into that pool. So imagine if there are 7 participants, for argument's sake, let's say there are 7 participants on eKash. This could have meant 7 projects, 7 leads on the project, 7 commercial models, 7 marketing and communication plans. But this means you're simply doing it once. One integration and opens up access to all these. So for us, that's what it meant. It's like you're telling your family, you don't just have to play from the living room. You can as well go out in the compound. The compound is quite wide. Yeah. So everybody can run, you can play soccer, you can play volleyball. You can play volleyball in your living room. Yeah. So for us, it was just opening up that space and widening it for immense opportunities, both for us as service providers, but also for consumers. Disclaimer here is that I think I'm privy to so much more knowledge, having participated on the, supply side of the solution, which is the switch. But now I'll speak from the demand side. I think the biggest challenge that we noticed, one, was a new technology protocol that was being used. At the time the switch came with this eKash solution, we had to adapt or consume what we call a protocol that is different, what we call an ISO 222. ISO 222 was fairly new, not only in Rwanda, but across different markets, which meant that the technical teams had to deal with a different protocol from what they were used to. So the encryption part of it, the security component of it, were quite a bit advanced compared to what people were used to. So that led a bit of delays on the technical side. On the business model, we had participants moving at different paces. So if, for instance, today we say milestone 1 is that we close what we call SITs, system integration tests. You have to make sure that all the partners are moving at the same pace. So you'd find maybe my developers, if I'm using offshore teams, for instance, we have different time zones. The offshore teams are not going to be available at the same time that probably the local teams are expected us to be online. That could be 1. 2, it could also be the differences in competences and understanding of the technology itself. So that also brought some learnings to say you need to accommodate everyone and move at a shared or mutual pace. Thirdly was just also to deal with bureaucracies here and there. Certain institutions will probably focus more on the technology rather than the business. Others will want to focus more on the compliance rather than the business. And somebody else will just want to focus more on the margins before I get to understand. So all these competing interests and expectations had to be dealt with for us to move at the same pace, because as an industry we had to move at the same pace. You cannot launch with the 2 partners when you intend to have all the 7 on board. True. And so the learnings here was mostly to adapt very fast to the emerging technologies at the time, the ISO 222 standards that I mentioned about. 2 is to understand, to accommodate different models, different paces, different time zones, and different skill sets of the people that were on it. But overall, we learned quickly that it only makes sense when we participate on a shared platform. What it means for us as businesses is less investment, less costs, because you're sharing the cost of this infrastructure. And then it helps you actually to focus more on innovation, because the time you could have spent building products for the off-net customers is already taken care of by this integration. So you focus more on the innovation side to say, what more can I provide now that someone is taking this burden off me? I don't need to deal with 7 other integrations. I have to deal with only one. So all this time means I'm going to immerse myself into the data that comes with it and see how much more I can monetize it and make and take advantage of all that it brings. If we are to talk numbers, I would say even before we get to numbers, number 1 was the ease of transacting. Before eKash, what it meant for a customer to get or send money was multiple journeys to different agents. I travel to an agent of Airtel Money, I do a cash-in, they load my wallet, then I send the money through a complex process and user experience to the other network. The customer on the other network receives the money and has to travel to an agent of their network to cash out, because there's no other option. You could receive what we call a voucher. So it's just a message that comes, and the only way to receive that money is if you send that message, and it's, for lack of a better word for this, is as of to decode it and ensure that it is monetized by the agent on the other network. So the voucher is consumed by the agent, and the equivalent amount is what they give you in cash. So you digitize the money on this network, you paid commissions to your agent, forget the cost to the customer, and then you move this money across the other side, the voucher goes, and the customer has to travel to look for an agent on the other side. The agent cashes it out and gives you cash. So it's as if we are moving money from one ecosystem, digitize it, only to be cashed out again. So that was pain point number one. So what eKash did was to simplify things and say, look, you don't need to travel to make all these journeys as a customer. Do a cash-in, wherever you are. You can pull money because you're now integrated with all banks. Wherever I am, from this particular interview set, I pull money from my bank account because this bank is already integrated with a switch, so I can access any bank. Pull money without traveling, put it on my wallet, and then send it from my wallet to the other wallet of the other network. The other customer doesn't have to go to an agent to cash it out. It lands into their wallet as cash, as digital, as e-money. So they don't really need to also go and cash it out. So once they receive the money, the choice is theirs. Do I use this money to pay for goods and services, or do I move it to my bank account, or do I keep it on my wallet? Because the only way you would be sure that you received prior to eKash was to cash out that voucher. So you see the money, the physical cash. But now you have the digital wallet, sending to another digital wallet instantly in real time. And what we made something that was very unique for Rwanda. We made sure that the user journey is the same, irrespective of which network you're sending from. So a customer sending from Airtel Money would go through the same steps, same journey, 182 *1 *2, enter phone number, enter amount, and PIN, and send. The same way the customer on the other network would do when they're sending to Airtel Money. So all these kind of brought a better, much better and simplified experience to the customer, much more security, less costly, and very much instant. So P2M, that is a person to merchant. So sometimes we call it P2B, person to business. It is the second level of our journey, our milestones on interoperability, having closed the person to person. We believe this, above any other use case, will be the most game changer when it comes to the whole journey of interoperability. Why so? Because the most preferred use case for customers is to be ability to pay for goods and services wherever they are. Today, again, they are still closely within their own loops. So we go deploy our own merchants, and our customers can only pay at our own merchants. So opening up this will definitely mean a customer called Clinton does not necessarily have to look for a merchant of their network, could be able to pay any merchant of any network, any bank, and be able to get their goods and services. So what we foresee, one, is definitely it's going to improve on the customer experience side. But more than anything, of course, for us it is value. Only if we do the business model right. So disclaimer is that we must ensure that we have the right business model. Business model meaning it must make sense to the switch, to the service provider, and to the merchant. Rwanda has got the privilege of, customers are enjoying a free service when it comes to P2B. It's a different discussion when we go to other markets beyond our borders. So we need to make sure that we have the right business model to be able to make sense for the customer, for the switch, for the service provider, that is ourselves, as well as to the merchant to be able to receive money digitally. There has been a study in the past that central bank ran, and the study showed that businesses are losing about 4% of their transaction value because of transacting in cash. So looking at doing away with this 4% loss to the businesses will definitely be a huge game changer for them. For us as service providers and customers, it's definitely going to be something else, because when you look at the impact on our P&L, I could say not anything less than a double-digit improvement contribution to our core revenue that interoperability will bring. So, of course, working in harmony with the regulator will ensure that we have the right business model for everyone, and then we'll be able to move forward with this. Well, what interoperability actually does, in one simple term, it levels the field for players. We may have varying market share sizes today, but it is no surprise that depending on the inputs, the energy, the investment that you put in, that we've done as Airtel Money, we've been able to push against and punch above our weight, that we are dominating when it comes to the market share of interoperability. Today, in the vicinity of 55 to 60% compared to competition, which ideally would naturally be having a much bigger market share on the same. So the investment and dedication matters a lot. So for us, what we see moving forward is that with all these synergies coming in, it is going to continue to level the field, and it is going to give us more time on our hands to build products, because then you have more data that you're dealing with. I need to study the data. The customers that are sending money from my network, what are the it that they're looking for that I'm not providing? The customers that are coming to my network, what is it that they're enjoying that I need to give more? So these two alone, you get a very good data scientist, you'll be able to build several other products that you can then monetize based off the data that we are extracting from being able to participate on this interoperable platform. So for us, data is very, very key. And so the more data we have, the more insights it pushes us on which direction we move, strategically speaking. It has always been our wish to serve more customers, be it on our own network, but it also be beyond our network. So this definitely just evens the space that we want to keep participating in. In our own perspective is that through this collaboration, we are going to build an immense data pool, not only for our ecosystem as a country, but also the region. What Rwanda is doing is something that most other countries or other economies are still trying to do, including the Western economies that ideally claim to be more advanced in this particular space. Having built everything from the switch, what we call the hub and spoke model, it gives us an edge as an industry, as a country, as an ecosystem, to be able to participate and have a seat at much higher tables than we could have had if we were not going into this model. Because the other option is to go the bilateral models that I mentioned earlier that are very cumbersome. We call it sometimes spaghetti model because of the complexities that come with it. So what this means, it's bringing new avenues for businesses and new avenues for revenue, not only just for the switch, even for all of us players. You mentioned cross-border. For instance, cross-border is a huge opportunity. Today, without an aggregator, you'd have to, to chase different countries to do integration with them bilaterally. If you take advantage of aggregators, then the work becomes much easier, but of course you lose out on the margins. So there's always a compromise. You want to scale faster, then you have to share the gross margins that you're looking at. So what this will help us is the speed to market, going via the switch, and ensuring that the switch handles that burden on our end. The compliance parts, it means they have to really be extremely compliant, because compliance in different jurisdictions varies. So our compliance levels may be either advanced or less advanced, depending on the market that you're looking at doing business with. So ensuring that this is done at a more centralized way, it gives us comfort that our businesses are in the hands of a very compliant environment. Recently, we've seen a lot of focus and interest in data privacy. When you're looking at performing a transaction, a lot of data is shared and transmitted. Of course, we make sure that there are safeguards, that whatever data we are sharing is encrypted, and only that which is necessary to complete a transaction is shared. When it comes to cross-border, even more parameters are opened up. So you need to ensure that, one, the scalability, the availability of systems, SLA adherence, all these are catered for to continue to make business sense for everyone involved. And this means, for me, it's not just to send and receive money. I need to be able to move with money in my wallet. And if I'm traveling to Nairobi, I'm traveling to Lusaka, I'm traveling to Cairo, and be able to make a payment off my wallet. I don't need to move with my phone and it remains something that I can only roam with. When it comes to payments and I pull out a Visa or MasterCard, why can't I do the same, since we have opportunities such as what perhaps is coming, the Pan-African payment platform that is already going to support on the Pan-African level. So we need to look at things such as switch-to-switch integrations. Rather than doing most of the heavy lifting, let every switch do their own innovations, and then you just do a plugin, and then you give out access to such a huge ecosystem with the same integration benefits that I mentioned at the beginning when we were looking at our own local setups. So huge data, understanding of data and interpreting it, huge compliance checks and obligations that we need to look at, and of course, something that tends to be left to politicians, which is to do with the settlement. Today, it's unfortunate that Africa still trades, when it comes to global or even regional businesses, we still trade off what we call legacy currencies. If I'm moving money from here to Kenya, that's franc to shilling, it has to be first converted into a dollar, or if it's another economy, it has to be either a euro or a yen or any other of those legacy currencies. We need to have a way for us to start trading within our own local currencies, so that Central Bank Rwanda can settle with Central Bank Kenya from franc to shilling without losing the FX margins that actually make the cost of transacting very expensive unnecessarily. So taking advantage of things such as the Africa Free Trade Area, the AfCFTA, taking advantage of integrations that I mentioned at the regional base, be it EAC or COMESA or even beyond, we should be able to see these benefits coming down to the consumer, to say it is faster and less costly to do business if we move money into our own currencies rather than making conversions into legacy currencies before it reaches the destination. Challenge number one is always around compliance. How do you respond to regulation? We've seen regulators being very much more aware and sensitive to how we are sharing data. Today, the consumer owns this data. Gone are the days when service providers felt they owned their data. They owned your data, sorry. So customer Clinton would be an asset to a service provider. So they would own your data and trade it and use it anyhow. Today, regulation has empowered the custodian of this data, being the consumer, that Clinton today has the power to decide who accesses my data and how you share it. And you have the right to claim that ability that you give the service provider. So risk number one is understanding this framework of data privacy when it comes to share information. Number two is cybersecurity, of course, which is also linked to data privacy. Cybersecurity today is no longer a preserve of service providers. The other side of cybersecurity, which is, people are into, what is that industry called again? I'm missing the word. The scammers, fraud. It is another ecosystem altogether. Globally, you'd be talking about a billion dollar cap market when it comes to fraud. So as much as we are protecting the customers, there's another ecosystem growing, looking at how, to extract loopholes within our systems. So cybersecurity remains very, very key, which is why we are looking at, embedding such parameters of security in every service that we are providing to customers. And today, with a lot of proliferation of social media, people sometimes are not aware what they're sharing. You can complete a transaction on TikTok. You're watching a video, you like a product, you make a transaction, you complete it without leaving TikTok. You could do the same on WhatsApp. But do you know that you've already given WhatsApp so much information on TikTok that you're not aware how it is even being used? So what if somebody solicits this information and uses it against, a desired solution that you're looking for? So this is where we have to be really, taking time to study and understand this other ecosystem of the fraud side of the business that is growing. So for me, understanding data, being very responsive to compliance and regulation, and ensuring data, cyber security on top of, it has to be top of mind whenever we're building products. Well, I'm not paid by Netflix to say this, but you remember the days of CDs and video libraries? Some of you probably may not remember. You'd go to a library, subscribe, you borrow a movie, go watch, take it back. Today you don't need. You have an entire library of entertainment, sports, movies, anything, cooking, documentaries, anything at the fingertip. With one single subscription to Netflix, you have access to anything that you can, watch globally without moving the comfort of your couch. For Rwandans, it is something close to that. We're saying you don't really need to leave your couch to know where the agent is, to know which bank is open, to know who has money, who doesn't. You just do everything from the comfort of your couch. From your comfort, if you're stuck in jam, you can still do a transaction. If you're making a wedding contribution, I don't need to say, Clinton, meet me at the office, I'll give you a check. You make that contribution seamlessly. If it is, a friend that, you need to support in one or the other, you don't really need to have a physical interaction to be able to do this. So there is so much that eKash is bringing to say, please, we are bringing innovation and comfort, on your fingertips rather than you coming to us. So it is more supply driven than, I would say, demand driven, and say, there are immense opportunities that you can do with eKash. So to a Rwandan consumer, I would say embrace it, because one, it comes with all the security, because regulation has taken care of that, including pricing. And so the most you can do is just, why play within your living room when you could go out and play in the fields and enjoy fresh air and have a wider space to express yourself.